This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com. Okay, well, we've been through the multiple choice questions on the specimen paper for paper F5. But if you haven't already done so, do make sure you've printed it out from the ACCA website, then you can check with me. But we're now going to start going through section B. And although in the real exam you can do the questions in any order you want, a sensible thing would be to do the topics you feel most comfortable with first and leave the ones you're less happy with till the end. But I'll do them in order. So first of all, question 1. Always look at the requirements first, otherwise there's a danger of wasting time. But A, calculate the return on investment for each of the two divisions. B, calculate the residual income for each of the two divisions. And C, comment on the results. And do note, importantly, that the 10 marks, 4 marks are for part C, which is just writing. So although you can pass it just on the numbers, it only needs one tiny mistake and you've got problems. And don't do as too many do. Too many people either don't write anything or very, very little for the written parts. You can't risk wasting those 4 marks. Anyway, now let's read it. Brace is split into 2 divisions, A and B, each with their own cost and revenue streams. Each of them is managed by a divisional manager, has the power to make all investment decisions within the division. The cost of capital for both divisions is 12%. Historically, investment decisions have been made by calculating return on investment of any opportunities, and at present the return on the investment of each division is 16%. A new manager who's recently been appointed in Division A has argued that using residual income to make decisions would result in better goal congruence throughout the company. And each division is considering the following separate investments. Well, let's get straight on with, well, first of all, A, calculate the return on investment for each of the 2 divisions. So the return on investment, it's the profit per year as a percentage of the capital investment. And so, for Division A's project, the profit, well, we're told what the sales are, 44.6 million. We're told the net profit margin, 28%. So the profit is 28%. The profit is, that can't be right, 28% of 44.6. The profit is 12.488 million. We know the capital required is 82.8. So the return on investment, 12.488 as a percent of 82.8. Which is 15.08%. And incidentally, I should have said earlier, but for section B of the exam, they do mark your workings. So don't just have a mess of numbers, help the marker. In the middle of an exam, you're going to make silly mistakes. If it's clear what you're doing, then a silly arithmetic mistake is only going to be half a mark. But if the marker can't follow your workings, then you made one silly mistake, you risk losing all the marks. So do take the trouble. Help the marker set it out neatly. Anyway, that was for Division A. For Division B, of course, if you can do one, you can do both. Because Division B, the profit, the margin is 33%, on sales of 21.8 million. So the profit is 7.194 million, and therefore the return on investment, the profit as a percentage of the capital required, 40.6, which is 17.72%. So I think mine's neat enough. Underline your answers. They'll look straight for that. If it's right, great. If it's wrong, they'll look at the workings. And again, if you're doing it the right way, you'll still get most of the marks. Anyway, that was part A. Part B. Calculate the residual income for each of the two divisions. Well, here I'll do it side by side. For residual income, we take the profit. Well, Division A, first of all, we've calculated the profit as 12.488 million. For B, it's 7.194. We subtract this notional interest, and the interest is calculated as the cost of capital, which, third line of the question, is 12%, as applied to the capital required, which for Division A is 82.8. So for Division A, the interest is 9.936, which leaves residual income for Division A of 2.552 million. Similar Division B, we knew the profit, 7.194. The interest here, cost of capital again 12%. The capital investment for Division B is 40.6. 12% of 40.6 is 4.872, which gives residual income of 2.322 million. And so the marks, I think, are a bit the wrong way round. Now, Part B, given that we've done half the workings for Part B and Part A, Part B I think is very quick. Whereas that was 4 marks, Part A was only 2, but still. There are the residual incomes. For A and B, that was just pure arithmetic. But what about C now? Which, as I've said, don't dismiss it. 4 marks. You only need 5 marks to pass. You could have passed on A and B, but it's a bit scary. You're not going to be perfect throughout the exam. But see, comment on the results, taking into consideration the manager's views about residual income. And what was the manager's view? At the moment, remember, they use return on investment as the way to make a decision. The new manager has argued that residual income would result in better goal congruence throughout the company. Well, I'm not going to write a full answer here. You can read the examiner's answer. Me writing it down will just waste time. But it's very standard return on investment residual income business. In that you see, at the moment, each division, they're being measured on return on investment, and at the moment, they're both making 16%. And if managers are being measured on return on investment, when they make any decisions, they're only going to be interested in projects that will give them more than 16%, improve their return on investment. And so B, no problem. They'll accept this investment because it gives 17.7. It's more than the 16 they're currently getting. But Division A, they would reject that investment. Why on earth would they take that one? They're currently making 16%. This new investment's only giving 15. It'd make things worse. So under the current system, B will take the project, A won't take theirs. But it's not goal congruent because the company as a whole has a cost of capital of 12%. And so the company would want them to take anything that gave them more than 12%. The company is happy with that B takes the project, the company would want A to take the project as well. We've got a problem. Well, that's the real beauty of residual income. That residual income, by taking that 12% there, it is checking, are we getting more than 12% or not? And since in both cases the residual income is positive, we are getting more than 12%. It'll increase the overall residual income of each division. Both divisions will want to take the projects, and that is goal congruent. So I hope that made sense. As I've said, read the examiner's answer, and remember she always writes more than she expects you to write. But that's the point that we were trying to make, or she wanted you to make in part C. Okay, so that's question 1 done.